here at Contour Mortgage Studios, and we're sitting with Randy Lin. And Randy is someone who we've gotten to know, and he has a very special approach to his business. Randy, why don't you tell us a little bit about that? Because it tells, I think, a lot about you, how you approach your business in terms of your personality and your care, the care you provide to your clients.
I appreciate that question. Yep, so when I joined Keller, I have a plus equal minus policy that I have. Okay. Is a structure that I found online that's been helping a lot of people in the industry. And how it essentially works is that the plus is that you have a mentor, someone you look up to, that'll teach you the structure that made them successful.
Okay.
All right. And then you have an equal, someone a partner, that you are going through the events with, that you're learning with, to hold you accountable to learn more.
But that partner could be not in your business, it could be just in your everyday life?
Of course, yeah.
Okay.
Just my fiance, that's my partner
Oh,
right there.
okay.
But this is not just in the real estate industry, but like such as fitness.
Okay.
You have someone you work out with, it makes you run the extra mile. There's an extra step. It's really powerful, but I always have the mentor or someone that is doing better that I look up to.
That you can aspire to.
Exactly.
Right.
You have the equal and then you have the minus, someone that you are teaching or you want to leave your legacy on. I think that's very beautiful. So throughout this process, once you make deals or you sell houses, it's very gratifying, but it's amazing when you get to be a part of someone else's process, that they made the first deal and you were there to help them be able to make that achievable.
And that probably filters over, though, into the way you treat your clients, right? It's taking them along with you for a journey and giving them all the support that they need to be able to do a transaction.
Exactly. So each of these steps help you feel more appreciative of both your workspace, your clients, and again, in different industries of your life, it does build that environment, essentially what you surround yourself with.
Well, I can say, Randy, from experience of doing this 25 years, that you're a remarkable person, and it's good to see that the industry has very good people that are giving back to new people coming into, the real estate industry, which is so important.
Yeah, vice versa. Yeah, vice versa. I'm always in the office. I see you guys there all the time. You guys are working very hard, and that's the people that I love on my team because I want to work hard as well.
Well, I think that one thing you brought up. There's a very valid approach to a team approach. It's almost like that system you have because you're always relying on someone else, right? You're relying on your mentor, maybe to help to see you through some tough deals or tough situations. You're relying on your equal for that support, but then you're also giving back to someone else. So that whole team process, I think, is really a great one to be able to pursue that. Tell us a little bit also about what do you see in the market right now? It's shifting, and given that shift, what challenges does that present to some of the clients that you're working with?
Yeah, so
whether they're buyers or sellers, however you'd like to approach it.
Yeah, so there is a shift in the market. It's not as crazy as it was during COVID, where there's lines outside of the houses. Right now, it's a little more sellers. With the increasing interest rates, that's what most of my buyers are more worried about. In the last 2 years, interest rates have been the lowest they've ever been in history. We've gone under 3% before, and now we're at 6%. In the last 15 years, this is where we're actually, the average of our interest is around 5 to 6%. So this is actually very normal for us in order for us to correct in this shift. If we were to maintain, let's say, that 2.5% or 3%, we will be in this market where we will be constantly having those lines outside the houses, and each of these houses will continue increasing exponentially, where now these houses will be unaffordable. So these shifts are needed in our market in order for it to balance out, so these houses become more affordable for these buyers that are currently looking.
Yeah. Well, I think that we had talked about it. We had discussed this over the last 15 years, beginning with 2008 to present. There were major shocks to the economy that necessitated that decline in interest rates.
Right.
But things are recovering. The pandemic is over. The Great Recession is way gone. And what people, I think, don't realize is that before the pandemic, interest rates had started to go up.
Right.
But
I think they were right around 4.5%, and then And then the
They were even
pandemic.
slightly higher.
Yeah.
About almost 5%. But so what's happening is rates are beginning to normalize, right? They're reverting to the mean, but the public hasn't been adjusted to it yet, because this happened over 15 years. They still look back at something that extraordinary times, and you can't. That's not what is going to happen going forward, right? It's a good thing to get back to normal. So we don't have to absorb these shocks in the economy.
And we plan with our buyers, we set the correct expectations. We set them down for like an hour, 2 hours to let them know the expectations that they had over COVID to where we are trying to do right now. And then we have a great team, again, with you guys, just trying to figure out how the monthly payments, and that's the main issue or the main picture we always look at compared to if you're renting to what your monthly mortgage payment would be. And when you compare those both, it's like, all right, even though my interest rates may be this, you start moving away from the fact that the interest rates are there and start focusing on the fact that you are no longer paying rent. You're actually buying a house, you have an asset, you have something that is fighting against inflation, you have a home. That's something that's
Most
really
important,
cool.
right.
Exactly.
And I'll give you a little trick that we use with our clients. $2,500 a month in rent is $30,000 a year. If you do that for 5 years, 3 times 5 is 15. You're at $150,000. So what we try and do is just give that little explanation to clients, so
5 years
that
is not a long time.
No.
Think about it.
and if it's not 5 years, it's 4 years. But
Right.
the point we try to drive home is, even though prices have gone higher, even though interest rates are a little higher, what is your alternative? If you're living with mom and dad, that's not a problem.
Right.
But if you're a young adult out there, renting a place, that's at least buying something helps you to build some equity and to, and it's a place to, grow a family or, live your life and not, not just paying rent.
What are the most important 3 steps you need to know when you're buying a home?
Yep. So I would say have a great team. Team as in real estate agent, loan officer, attorney. Those are the 3 biggest pieces to help whoever the client is in order to move forward. Or in this case will be buyers, because loan officer. All 3 are going to help each other, and all 3 are going to be able to put them in the right direction. So such as anything going on with finances, you want to have a strong loan officer for that. Anything that goes on with contract, or once you get in contract and something's going on with title or CO, you want to have a strong attorney for that. And the real estate agent, I would say, is like a quarterback in the football team. They pass off all the network. If something goes wrong in the house, we call somebody. We have a handyman. We find someone that's a handyman. We have someone that does staging for our houses. That's what we do. But I would assume that having a very strong team surrounding you guys and having people with good ethics is really good with that.
Right, and I think that puts the buyer in the best light when they're giving an offer. What advice would you give to sellers? Right, the market isn't accelerating like it's been the last couple of years. It hasn't gone down, but it's just not accelerating at the same rate. So, what advice would you give to sellers, and how are you working on adjusting their expectations, giving
changing their perception of what's going on out there?
I was definitely talk to them about the patience. It's not as busy as it was a year ago. Mm-hmm. So don't expect that the line to be right around the corner with all the crazy lines itself. So what we do now is that we actually look at what's currently on the market and not what's closed. So usually what a lot of listing agents do is that they come to the home, it's like, hey, this is what's closed in the last 3 months. This is how we price it out as. What they don't realize is that those prices have been dated from 3 months prior before that.
Right.
So what we do is we compare what's currently on the market, how many days are currently on the market, which each of these houses, and this is what you're competing against. And then we price it accordingly to make sure that this fits in the current market as best as possible. We use great tools like RPR to make sure that any issues that we're in the right estimate, and then we take care of our end to make sure that the open houses go as best as possible and get you guys those deals.
Are you still getting a few offers, multiple offers on properties? I know you're not getting probably as many, but you're still getting multiple offers, full price offers. Are things going over asking? Why don't you talk a little about that?
Yes. So my last house that we sold went a little bit under ask. We had 3 offers on the table, but they purchased that as is. It was a really great event. We assisted one of my coworkers who was selling their house, and that was essentially what has happened. It was on the market for 1 week, had an open house, had a good bit of people come in, had 3 offers right there, and we set them on right away. So it's still very lucrative as long as you price it correctly, you do your marketing correctly.
Well, that's the key, is pricing it correctly.
Right?
Exactly.
That's it.
You know.
That's it. Overpricing a house
What do you
does not
accomplish?
work. Why don't you talk a little bit about the disadvantages
Disadvantage
to
of
course.
overpricing?
Have you guys go to grocery stores? What's your favorite grocery store?
Whole Foods.
Whole Foods?
Geez, Stop and Shop.
Stop and Shop.
All right, so when you guys go to your grocery store and you go to the bread aisle, you guys want the freshly baked bread, right? You guys don't want to go into digging behind the shelves for something that has been expired or that's going to be expiring tomorrow. That's essentially what listings are. The longer that it's on the market, the less people are going to like, is something wrong with this? Is something wrong with this bread? Something wrong with this property? So they're not going to be viewing it as much because not priced correctly, something's wrong with the house, but something that's new on the market that's priced correctly, that's what sells.
Because the number of days, exactly what you said, realtors use that term, right? It's a stale listing. And so that's what happens, and that triggers something in a buyer that says something's wrong here. It's been on the market for 4 months. What is it in the profile of this house? Like you said, is it maybe they don't have C of O's, or maybe it's being priced too high, and it could be a number of things.
Yeah, you lose the sense of urgency.
Right.
Yeah, so if you come to an open house and you have 5 people there, those are the people you're competing against, and it builds the buying environment. As if one person views there once a month, you don't have that much competition. You have more leeways for the buyers to be able to take their time to, say, think about it overnight, maybe the week. So we want to make sure that we have that type of environment to make sure that it's always a buying or selling environment for both the clients.
Your transactions, what type of time frames do you see right now? 60 days, 90 days, from start to finish?
Usually about 60 and 90 days.
60 to 90 days, okay.
Yeah, 69 days is usually the average. I've seen some in 30 days, but that's like one-off chance where all the paperwork's there. But yes,
when you're prepping a homeowner that's going to sell their home.
Yes, so usually I would say that we usually have an offer within the first month. We want to have an offer within the first 2 weeks. Just because, again, going back to the bread scenario,
That's the goal.
we want to make it as fast as possible, make it hot, make it a new topic on the block.
Right.
So usually the first 2-3 weeks is where we get offers, and we also prep in the homeowners like, hey, usually it's gonna be about 90 days, but in case if you have some contingency, if you need to move, we plan accordingly. We let the buyers know, and adjust the schedule with how the homeowner likes, and make sure that we're ahead of everything.
What do you think it's important for people to know when they're buying or listing? Maybe something that we hadn't touched upon.
I know a lot of people are afraid right now because people think of recession, they think about bubbles. A shift in the market is needed for us. It is definitely needed for us. As we mentioned before, if we were on the same rate as the 3%, prices are going to go crazy. I think this is healthy for both buyers and sellers to be able to meet in the balance, because that is where we want to be at all times, where there's amount of supplies for the amount of buyers there. But currently right now we are lacking in inventory and supply. So this August compared to August 2019, we're still 40% down in inventory. So we do have a shortage of inventory compared to the buyers. So right now we are still in a seller's market, but shift is needed in order for a balance out, and that will help out both homeowners and buyers themselves.
Right, and that's, as you said, that's healthy.
That's very healthy. Yeah, we can't go too one way.
Needed
right.
Exactly. If you have too many buyers, it's going to go up the pricing. If we have too many sellers, we have a bubble.
Right.
So that's that balance is really great for us.
What do you tell your your buyers about pre-approvals? When you're sitting down with them before you're taking them out, obviously you look for them to get pre-approved, right? How important is it to work with a lender that looks at all of your documentation as compared to some of these online services where they're really not, looking at the numbers, and let's talk about how that complicates your process and how many people are affected by that, the homeowner, the seller. A little bit about what you request from your buyers when you sit down with them.
That is extremely important, very, very important. The reason why I say that is because I'll shop out. I had this in the beginning of my career, about 8 years ago. We take out our clients and we'll find a nice home for them. Unfortunately, if they don't have a pre-approval, then it's the worst feeling ever to be like, hey, this is my dream house, I can't afford it. And now the expectations for them is shattered. So now they've seen all these houses.
Deflated. Yeah.
Exactly. You see all these houses that were in this price range that you really wanted, and then all of a sudden you have to backtrack a little bit. So we always want to hedge that and make sure that we at least speak with the loan officer, make sure that pre-approvals is good. You guys do a really great job of doing the credit, income, all the necessary paperwork. So when I go out there, I feel comfortable to say, hey, this is a house that you could afford. This is a house that you like. This is a win-win scenario for everybody. And that's essentially what we want rather
Let's
than...
put an offer in.
Exactly. Exactly.
Without that, you can't put the offer in.
That's correct. Instead of pulling the rug away from them, we want to make sure that we're there to support them.
And we're always adjusting clients' expectations because, your monthly payment at 3.5 is not going to be your monthly payment at 6.5.
Exactly.
Or 6%. So we're always trying to adjust that expectation. Some of them may not qualify at today's rates, but if they do qualify, we need to adjust that expectation in terms of what the monthly is.
Yeah.
Right?
Yeah.
It's like, wow, all of a sudden I have to pay $500 more a month.
So we always tell our clients, which are your clients, every 60 days we want to update that pre-approval. Some of them even 30 days. Whenever you find a new house, let us just run the numbers. Whenever you update your pay stubs, bank statements, send them in. So we're constantly.
And even though that may seem like an extreme, it's interesting because the rate of acceleration in interest rates, it's never been this great.
Yeah.
In such a short period of time. So, we went from in November, maybe 3.5 to 6.25, 6%. So the thing is, you really need to do that because if you pre-approve someone a couple of months ago and it was 5, it's like, well, it's a little higher than that now. And it seems like it's a really short period of time when he expresses that, but the reality is the way things are moving, it is that way.
I do like having the in-person meet with the loan officers too, just because I know you're mentioning about if you got a pre-approval online, it's so much easier giving you guys a call and you answering my phone call within the next 5 minutes compared to reaching out to something online and then trying to get in touch with the loan officer, and then the numbers don't make sense. It's very easy to I know where your office is.
But you know what? Also, you could run it back and say, you don't have to sit down with them. I mean, technology today, just go on Zoom.
Oh yeah.
Have that conversation. I mean, Bridget and I, throughout the week, are on Zoom 10, 15 times a week, and we're talking to people, and it gives us that opportunity where, hey, listen, they've got 3 kids, they've got soccer practice, after school specials, to bring all those kids in. Look, 8 o'clock, we'll do a Zoom call, we'll sit down, we'll go over with them with the numbers. When the house is settled, you can read their expressions as to, are they understanding? They're making a 30-year commitment, and you want to educate them throughout that process. And that's what we're supposed to do on your side and our side. Are supposed to educate the buyer as to what they're going to experience in this process. So we do like the Zoom, right, Bridget?
Yeah.
We do.
Zoom's very efficient.
Although nothing takes away from
an
that.
in-person meeting.
It's always good.
being
you know,
able
if you
to
can.
extend a handshake is always a
Yeah.
nice thing, but sometimes that's not convenient for people. You know, for people, for buyers, people who want to come and see us. So it's the next best thing. They still get to see us. And as Charlie said, we could still read the expressions on their face. When you talk about a monthly mortgage payment, that's $3,600 or $3,700, which is not atypical today, right?
Right.
And you can see that cringe,
Where
you
the
know, well,
taxes are-
maybe, you know, maybe we should go back to the drawing board here. Maybe you should
Yep.
buy a home that's a little cheaper. Maybe we can, or maybe you can put down a little more money.
Or maybe
you know?
it was never explained to them
Well,
about
that's
homeowners insurance, taxes, the association do, you know, we do condos,
the-
co-ops. I'm sure you
Right.
come across that and explaining that to somebody, you know, all the
right.
costs
They
that
don't
go into it.
understand the tax deductibility component of co-ops, and
Right.
they just don't get that.
Randy, I just want to thank you for coming in today. I mean, I know you've been real busy, and we've been talking about getting into the studio for some time now, but I really enjoyed this time with you. You're a true success, and we look forward to seeing what you do in the years to come, and the legacy that you're building with the newer agents is just phenomenal, and our industry needs more realtors like you. So thanks again, buddy.
Thank you so
Really
much for having me
appreciate
on.
Thanks.
You
We
guys have been so
appreciate it.
wonderful. This has been a great experience. And if you guys ever need anything, please give me a call. Number's right down below.